Hello everyone, this is Marshall Gidler bringing you the morning comment for August 21st. The dollar gained across the board again after the minutes of the latest FOMC meeting showed that the hawks are shifting the grounds of the debate. There was no discussion on whether a rate hike might be warranted. Rather, the group only debated whether to begin raising rates earlier than they currently anticipate in light of the rise in inflation and the faster than expected improvement in the labor market. At the end, they decided they needed to see more evidence before changing policy, but the message to the market was clear. Get ready, because here we come. The significant point for me is that while the FOMC is debating whether they might have to raise rates sooner than they had anticipated, the market still hasn't caught up to the FOMC's existing expectations. The average weighted FOMC expectation for rates at end 2016 is 86 basis points, or 3 rate hikes higher than the market's forecast. This means there's still plenty of room for market expectations to adjust upward and for the dollar to still move higher. Now, today is PMI day. China's preliminary HSBC market manufacturing PMI for August fell to 50.3, far worse than market expectations and barely remaining in expansionary territory. Though recently the Aussie hasn't been as sensitive to Chinese data as it used to be, today there was a clear drop of 20 pips in Aussie dollar when the figure came out. I'd look for the currency to move lower still. The PMIs will take center stage during the European day as well. The Eurozone's preliminary PMIs for August are released shortly after the figures for Germany and France are announced. The Eurozone PMIs are expected to decline slightly, which could put Eurodollar under some further downward pressure. In the UK, retail sales, excluding gasoline for July, are expected to rise slightly. That's a turnaround from the fall in June, which could be positive for the pound, but given the recent negative sentiment towards sterling, it's unlikely to be sufficient to reverse investors' mood, in my view. Later in the day, we get the U.S. preliminary market manufacturing PMI for August and existing home sales for July. Now, home sales are expected to be down a bit. That could provide an upward surprise, actually, given the strength of other recent housing data. The initial jobless claims for the week ended 16th August are also coming out. The forecast is for the figure to decrease marginally, which would also be dollar positive. Finally, we have the leading index for July and the Philly Fed index for August coming out too. Now, the Fed's annual symposium for central bankers at Jackson Hole begins today, but the big event there will be tomorrow. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, Head of Global FX Strategy at IronFX, wishing you solid trading.